Hello, trading has closed on May 10th, 2023. As always, we'll do our disclaimer, go over our calls and make some predictions. Well, this is my trading plan for Thursday, which is the 11th of May, 2023. Remember, it's a plan. I can change it. Plans can be wrong. Any trade you make should be made at your own risk. We said yesterday that I was looking for higher prices regardless of how we closed. Here's what we said. Bullish stuff. If we don't get down, should see higher prices. That worked. Look for the pattern with the early high. That worked. Tomorrow should also have the early high. Let's go over what MEJT had to say. Gave an ultimate sell signal early in the day. It certainly worked. Notice how this area in yellow was resistance, so we stopped at resistance. We also got a sell signal in the afternoon. Because of that sell signal, this rally is called false by the system, which means it'll retrace, giving us a target of 41.1570. So if you don't get up smartly, that's what the system says prints. I'm not so confident that one's going to work, to be perfectly honest. This is a pattern which usually closes near its low. And when it does not close near its low, it should lead to more rally. Now, I don't know how we'll open tomorrow. There's the PPI report coming out. And if we gap down and promptly take this out, we will hit the target, just as we hit this old target today, 41.4831, which will cross off the list. So time doesn't run out until early tomorrow. But if we don't gap down smartly and take this out, it's a positive pattern. Now, it's not so positive we couldn't take out any of these highs, and maybe we are going to get that drop, but this isn't normally what you expect, particularly when you take out all these lows and can't hold them. To me, that's more important, that you couldn't hold on to the lows than the fact that you couldn't hold on to the highs. So how's this affect the wave count? Well, I can still come up with a count from the 41.86 high, which has us an A down and B up and all the fibs work. And if we stop here, this was just a 50% retrace, we can keep dropping. But just because that count works doesn't mean some other one won't. You can count this any way you want to when it's a consolidation. So even though it's not the weekend, let's take a look at the longer term picture. Well, this is the count I've been using. I've always said it's not the only valid count. We do think this low is going to hold. I'm pretty convinced of that. And I just couldn't count this as an impulse, so I was counting it as a B. Could be A or B. You don't know. But I really wanted to complete 3 waves down followed by an impulse going up. But just for a minute, let's forget the count and let's take a look at the picture. You're making higher lows and higher lows. You're banging on resistance here, which we've shown. You're trading over the 50-day moving average and the 200-day moving average. The breadth is still pretty good. If it weren't for the count, you'd say this was pretty positive stuff. So maybe there's some other count which explains this. What if we made a leading diagonal triangle here? I mean, it's a 5-3, 5-3, 5 structure. It isn't my favorite count of this pattern, but I can count it that way without breaking any rules. And if it's the right count, which we don't know, it would explain why we're over those moving average. It would explain why the breadth remains good. It explains why we haven't collapsed after we made the recent high. And maybe that's wave 1, and we're going to make a modest wave 2 and then have a huge rally. If that's the right count, that would explain a lot of things that we don't know, but we can't dismiss the possibility. So we have to use the mixed signals rules. Now, tomorrow's pattern has a really high. We could still gap down. The producer price index report comes out tomorrow before the open. I can't predict the response to economic reports with a high level of accuracy, so everything I'm saying here could be thrown out the window. So we have mixed signals. Now, it's positive that today's normally bearish pattern didn't close near its low. Gapping and promptly undercutting today's low would kill the signal. But otherwise, we should see higher prices as this action is quite positive. Now, it's negative. There's a lower target, and the rally couldn't clear prior highs. So that's why the signals are mixed. Negative sentiment remains quite high. I see a lot of people calling for a crash here. But even though the negative sentiment's quite high, breadth is good. We're trading over the moving averages. It's possible any decline here is going to be much more modest than what I was expecting. It's possible that this is the right count after all. It's possible we're going to have just a modest decline rather than a retest of this bottom, which was actually I don't like spike bottoms like this, but this actually was a test of a prior low. You could argue that this bottom is a retest of this one, so it wouldn't have to be retested. And if you forget the count here, we could be coiling and ready to zoom to the upside. I'd still like a little more downside first, but if we don't collapse here, since I think that's the bottom, if we don't collapse here, and so far we haven't, we could be going much higher by the end of the year. Doesn't mean it starts tomorrow. So it's the pattern with the early high, big economic report coming out. We have a lower target. I wouldn't be shocked if it didn't print because today's action just couldn't hold on to these lows. I'm looking to see how we open tomorrow because if we gap down here, the bear pattern's still intact. But if we can't make much downside hay here, I'm going to look for places to go long for a position trade. And that's today's call.